The broadcast is now starting. All
Highlights webinar. My name is Dominic Bourquin and I'll be your host today. As you've seen from the publicity we've done about this webinar, we're going to talk about business records checks. The reason for that is we're seeing an increasing number of our clients receiving the letters and potentially visits as well. I also want to talk to you through some of the latest developments. I think from the revenues perspective, they haven't been quite as successful, these checks, as they might have been, but from a taxpayer's perspective, they've been very successful, which I'll explain reasons for later. We've also got a change in the date for the autumn statement, which I will also tell you about. It was all initially broadcast for one date, it's now going to be a day later, but I shall also talk to you about that as the webinar progresses. So, business records checks, well, introduced from November 2012 to try and make sure that all small business owners, self-employed individuals, are doing what they need to do with their accounting records. Important thing to note is, though, if there is no statutory list of what constitutes acceptable statutory records. So, the records you keep must just be sufficient to enable you to meet your legal requirements. That is, to produce an accurate tax return and, of course, accurate accounts, because it is from your accounts that your tax return is produced. So it is a little bit of a grey area because the revenue can't necessarily point to a list and say that you're not keeping certain items on the list correctly because there is no list. So it is a little bit of a grey area, but of course, as with everything with regard to HMRC, there are fines for not keeping adequate records. So much as we don't have a list, we do need to make sure that records are adequate for the purposes of producing tax and accounting information. So what usually happens? Well, very often our clients receive a letter saying that their business records have been selected for checking. Now, the reason they may have been selected could be a number of things. It could be the fact that perhaps they're not up to date with their compliance. Perhaps they are in an area, they operate in a sector that the revenue considers as risky. So it will be a risk-based assessment as to why they've been selected. And the letter that they get will usually say, by this date, you will receive a telephone call from HMRC to discuss your business records. Alternatively, if you don't want that hanging over you, you can actually call them earlier than that and discuss your business records then. When we've tried to call the revenue earlier and discuss the business records of some of our clients, the revenue haven't been available. So I think it may well be a question of just waiting for that call to come. What I should say as well is it's not a perfect system. Sometimes, despite receiving the letter, the call never comes, and it certainly doesn't come by the date that is stated in the letter. So just because you receive the letter does not mean to say you'll ever actually be rung by the revenue. From a taxpayer's perspective, the revenue don't make it easy. They don't tell you what questions will be asked in advance. But from our experience, we've compiled a list of about 10 questions that they will usually ask, and we'll go through those shortly. Those questions aren't necessarily fixed in stone. There will be some variation in the questions asked, but the core and the thrust of the questions is very, very similar. And the purpose of those questions is to risk assess whether you're keeping adequate records or whether any further action is necessary. If those questions start to stray into areas of specifics about your tax returns or your business's tax returns, then you should refuse to answer, because these questions are just in respect of business records and whether your business records are adequate. They cannot ask specific questions about your tax return or your business's tax return. So refusing to answer any questions of that nature is absolutely fine. So what questions are they? Well, we've got 10 questions. They are in front of you, but I will go through them. The first one is on a scale of 1 to 9, where 1 means not at all. To what extent do you understand your obligations to HMRC? Clearly, they want to know what you know about what you have to file for tax and accounting purposes, to make sure that you're aware of deadlines, etc. Second question, on a scale of 1 to 9, where 1 means never, to what extent do you need help understanding HMRC forms? Now, of course, most businesses will have an accountant to help them, but of course it depends how much help that accountant has to give them. Question 3, how long have you been in business? The implication there is that if you've been in business for a short time, you maybe won't have the comprehension that those who have been in business for longer will have over their records, firstly, and secondly, their obligations to the revenue and obligations under the tax system. The fourth question, how many business payments do you take in a month? And number 5 of those, how many are in cash? You can see the thrust there is that obviously if you take, I don't know, 500 business payments a month and they're all in cash, then the revenue would perceive that to be higher risk in terms of the records that are kept. And question 6, 7 and 8 are very similar. How often do you write up your business payments? Well, if you only write them up once a year, you'll be perceived as higher risk than if you write them up once a week. And question 7 and 8, how many business purchases do you make each month, and of those, how many are in cash? Again, if you make a high number of business purchases and they are all in cash, the revenue will perceive that as a higher risk. There will be a higher risk that your business records are not quite where perhaps they should be. And then at question 9, how often do you write up your business purchases? Again, if you do it once a week, that's much lower risk than if you do it once a year. And then number 10, can you tell from your record keeping which transactions are for business purposes and which are personal? Again, if you struggle to do that, then that's clearly a higher risk item, because you will then be unsure of what to report when you are preparing your tax returns for the revenue. This is clearly a computer-based risk assessment, because immediately at the end of those questions, the revenue will tell you what further action will be necessary. I can't emphasize more the fact that you must be honest, you must tell the truth, and even if you are selected for further action, that is not necessarily cause for concern, as I'll explain in a moment. If the revenue want to take further action, they may select you for a visit. They may give you details of further education courses, so maybe some sort of classes where you can improve your knowledge of accounting records and accounting systems, or there may be no further action. And in a number of cases that we've dealt with, there has been no further action, as clearly our clients prepare records that are adequate for the purposes of statutory reporting, tax and accounting, etc. We're often asked, would you like to be there by our clients as part of the call? The problem with that is that the taxpayer has to answer the questions, really. So we can sit there while you're on the phone. What I would advise is that, given the questions we've just covered, that you have a think about your answers, and clearly you need to be honest answers, but you have a think about those answers and make sure that you have the answers to them. And of course your advisor can help you in terms of number of transactions, proportions in cash, etc., etc., to actually come up with those answers so that you're not caught cold by the revenue. As I say, those 10 questions aren't set in stone, but they will be very similar questions you are asked. So I would prepare for the call and give honest answers when they do ask you the questions. What happens if they select you for a visit? Well, if they select you for a visit, usually it lasts around 2 hours, and they'll ask you questions about your business records. How do your records work? What accounting package do you use? Do you maintain them? Do you have a bookkeeper, etc., etc.? They will take notes of your answers, and they will also check a sample of your records. So if you say a particular procedure happens as regards making payments to suppliers, they will check a sample of records to make sure that those procedures do in fact happen. If your records are sufficient, then HMRC will tell you at the end of the visit, and you will not therefore be required for any further action. However, if they are not sufficient, then they will discuss the required improvements with you. And those improvements could take a number of forms. If improvements are required, you will usually be given time to implement them, maybe 2 or 3 months, and then there will be a follow-up visit. If you are required to make improvements and your accountant hasn't been present at the visit, then I would very much advise you to contact your advisor to help you implement the changes or implement the new procedures, to make sure that that you are doing what the revenue would like you to do to make sure your records are up to scratch. If they visit you again on the follow-up visit and your records are still inadequate, then you may be subject to a fine of up to £500 for a first offence, and unsurprisingly, if you destroy your records deliberately, there'll be a maximum of a £3,000 fine. If you are selected for a visit and there's a follow-up visit to check the procedures, you will also be subject to another business records check in 2 years' time to make sure that you are continuing to do what you said you were going to do. You should be aware that if during the check of those records the revenue finds something else that indicates that your tax return may be inaccurate, then they may well refer you to another team who will then perhaps investigate your tax return. They may raise an inquiry to look at either aspects of your return or the whole of your return. However, I would also emphasise that this is this visit is not a fishing expedition by the revenue, and if they start to fish, then they should be stopped, because it is literally a check of business records. It is not an opportunity for them to root around in either your personal affairs or in affairs of the business that are not directly related to the keeping of the business's records. So should your advisor attend the check with you? Absolutely, I say. HMRC have a habit of visiting premises, and when they're there, making clients and taxpayers do a lot of running around on their behalf, and running around on their behalf not in areas where they said they would be investigating. So in order to stop the visit becoming a fishing expedition, I would advise I would advise you to make sure your advisor is there. One example we do often come across is where the revenue requests personal bank accounts which are not necessary for the checking of the business's records, and that clearly is stepping over the line, and therefore they are starting to fish, and of course they will be denied those records. It is important to be helpful and polite to them. They are human beings, believe it or not, or most of them are at least, but also your advisor will help you to tread a fine line between being helpful and polite and not doing their job for them. Very often they may say to you, well, could you photocopy this, could you photocopy that, could you photocopy the other? And the answer is, well, you can photocopy them, and there's the photocopier. You absolutely should not do their job for them. They are, they're paid to be there and do a job, and they should do it. That said, helpful and polite is the way to go. The good news is no fines whatsoever have been levied for inadequate business records. So much as the revenue's trumpeted this new initiative as an education piece around making sure that people knew their obligations and were able to make sure they had the correct accounting information for them to prepare correct tax returns, they've quite clearly not levied any fines and therefore underestimated the quality of records that most businesses keep. Given we are a year into this initiative and there are still no fines, that shows you that the vast majority of businesses must be keeping pretty decent records, and those whose records are a little bit perhaps falling short, shall we say, clearly aren't falling short sufficiently to warrant a fine. So the business records checks have not raised the expected revenue, and they've quite clearly raised no revenue at all because no fines have been levied. So what have HMRC decided to do? Well, guess what? They've announced a fresh approach to business records checks from the 4th of November 2013. There are 4 pilot schemes in Edinburgh, Glasgow, Leeds and Stockport. Why they've chosen those, goodness only knows, but they are changing the way that they undertake business records checks. They're evaluating new risk processes and whether new approaches are cost effective and whether it fits with wider compliance activity. Now, wider compliance activity means can they shoehorn business records checks within other compliance checks, perhaps for employer records or things of that nature. However, they've also announced that they're going to work with tax agents such as Monahans, who are tax agents for their clients, to review good bookkeeping benchmarks to improve standards. What I think is very interesting is a year in, they've announced a change of approach, and there have been no fines under the current approach. So that makes me think the reason they're changing their approach is because there's been a lack of revenue raised, to be honest with you. I also would question this working with tax agents to review good bookkeeping benchmarks, because why should tax agents spend time and money assisting the revenue? It's quite clear that the vast majority of businesses are keeping good records, and it's quite clear that the revenue are falling short of their revenue targets, hence the need to change their approach. The last point I'd like to make is, as I think you can see from everything we've talked about today about business records checks, is that if you keep reasonable records, you have nothing to fear from these checks. There's no definitive list. They can't point to certain things you're not doing, and if you keep reasonable records that are sufficient for you to keep to make sure you deliver the right tax information to the revenue in a timely fashion, then there's nothing they can do to you. So if you get one of these letters asking for a call and then they follow it up with a visit, make sure you tell your accountant, make sure he is there with you for the visit, but do not be too afraid. Lastly, we move on to the autumn statement. Early publicity said it was going to be on Wednesday the 4th of December. That's now changed. It'll now be on Thursday the 5th of December around lunchtime as usual. I hope we maybe have some early rumours for you to share. Unfortunately, there's only been one, and that is around a potential shake-up of stamp duty land tax to make it a fairer system. That's all I have at the moment. I don't know what making it a fairer system actually means, but we will know nearer the time. That's all I've got for you for today. The next webinar will be in January, and we will promote that, obviously. Thank you for attending. The next webinar subject matter will be the autumn statement. I know it'll be a couple of months after the statement's actually been made, but I think once the dust has settled, we can get more of a handle on some of the proposals, and actually, as with any proposals made in the autumn statements and the budget, the devil is often in the legislative detail that's produced afterwards, that isn't necessarily announced by the Chancellor when he stands up in Parliament. So thank you very much for listening. I know it sounds a bit odd, but do have a lovely Christmas, and I'll speak to you in January.